Prepare yourself for an electrifying ride through the world of finance. The stocks that we will talk about today aren't just your run-of-the-mill companies. Instead, they should act as a bedrock to your investment portfolio, or they should act as strong anchors that keep your portfolio steady in the turbulent times of the stock market. The stock market is a realm filled with risks, but fret not, because I will unveil the keys to safeguarding and nurturing your wealth. We will be discussing 6 stock market treasures that are tailor-made to deliver handsome returns in the present market. So let's get started right now. In a world where renewable energy is on the rise, the timeless sources of oil and natural gas remain the bedrock of our global economy. Enter ExxonMobil, which is a company with a vision to fuel our future for generations to come. Picture this. On a fateful October day, Exxon forged a momentous deal to acquire Pioneer Natural Resources for a staggering $59.5 billion. Pioneer owns precious land in the Permian Basin, a massive shale treasure nestled in the American Southwest. With these assets, Exxon is poised to unleash a gale of production in the realm of domestic oil and gas. Exxon is already a behemoth in the energy world, and 2022 saw them pocket an astounding $55.7 billion in profit, thanks in part to surging oil prices. The demand for liquefied natural gas is climbing, and the company is embarking on promising new ventures that will propel its earnings to new heights. What's more, Exxon is displaying prudence by investing in low-carbon energy solutions, including ventures into hydrogen and renewable diesel. Keep your eyes peeled for their ingenious foray into carbon capture and storage, a revolutionary process capable of effectively trapping over 90% of emissions from industrial facilities. As the Center for Climate and Energy Solutions would tell you, it's a game changer. Exxon envisions that its low-carbon endeavors might one day eclipse its oil and gas ventures, potentially raking in hundreds of billions in revenue. Now, that's a story of environmental stewardship and staggering profit potential that'll keep you on the edge of your seat. In other news, recent events in Europe and the Middle East have underscored the pressing need for robust defense capabilities. Enter Lockheed Martin, the gallant knight symbolized by the ticker LMT, ready to shield the United States and its allies from an ever-expanding list of threats. Behold the F-35 stealth fighter jet, a linchpin in the security strategies of the U.S. military and 17 allied nations. But there's more. Lockheed's arsenal includes an impressive array of satellites, helicopters, cargo planes, and an extensive suite of defensive systems. This, my dear friends, is protection not only for nations, but for your very investment portfolio. With its coffers brimming with free cash flow, an impressive $6.1 billion in 2022 alone, Lockheed has been a reliable source of dividend income for its shareholders. And the company's commitment to stock buybacks further adds support to the ascent of its share price. Brace yourselves for the dividend increases set to grace investors in the years to come. Lockheed's colossal order backlog, swelling to a monumental $158 billion by the end of the second quarter, unveils a crystal-clear view of the future cash flow, a significant chunk of which is poised to rain dividends upon the fortunate shareholders. Next, let's move on to my next stock pick. Amidst the tempestuous market, opportunities await those who dare to stand steadfast. The legendary Warren Buffett, a maestro in recognizing undervalued gems during turbulent times, has orchestrated the symphony of success that is Berkshire Hathaway. With over 60 subsidiaries spanning a diverse range of industries, this financial fortress churns out a remarkable $25 billion in free cash flow annually. If that weren't enough, Berkshire's balance sheet boasts a war chest of over $140 billion in cash as of June 30th, a bulwark against financial tempests. What's more, the Oracle of Omaha and his trusted lieutenants employ this treasure trove to acquire undervalued assets and add them to the Berkshire collection. With a keen eye for high-quality companies poised for growth, this dynamic strategy has enriched Berkshire's long-term shareholders for years. Therefore, investors should consider this as their golden ticket to join the ranks of investors who profit alongside the legendary Warren Buffett. By investing into BRKB, it's like having legendary investor Warren Buffett himself managing your investment. Now we need to talk about Shopify. If you thought the Shopify saga had plateaued, think again. This e-commerce powerhouse has shaken off its growth hangover and is charging ahead with renewed vigor. In Q2, sales gains skyrocketed at an astounding 31% year-over-year rate, defying expectations and igniting the market with excitement. What's the magic formula behind this resurgence, you ask? Merchants have fallen head over heels for Shopify's versatile platform, capable of handling a diverse array of business tasks. This love affair is reflected in the company's expanding user base and the impressive uptick in subscription and payments processing sales. But hold on, because there's more. The real kicker is the growing buzz around artificial intelligence and its integration into Shopify's platform. Investors are elated about the prospects of AI supercharging the capabilities of Shopify, and it's already working its magic with popular features like the Commerce Assistant. While there may be questions surrounding the long-term returns from these investments, one thing is for certain: AI is set to amplify the value of Shopify's services. Coupled with the company's steady strides toward profitability, this is a recipe for potentially explosive shareholder returns over the next several years. Next up, we have Home Depot, an unexpected heavyweight that is stealthily running one of the busiest digital sales platforms in the country. With a whopping $160 billion in annual sales, Home Depot's e-commerce business is anything but a sideshow, contributing a remarkable 14% to that total last year. It's true that the stock has faced some turbulence in 2023, driven by concerns that higher interest rates might apply pressure to the business in 2024 and beyond. And yes, revenue is expected to dip slightly this year as homeowners scale back on large-scale projects. However, the housing market's long-term future gleams with promise thanks to fundamentals like shifting demographics, rising home prices, and an aging housing stock. Both Home Depot and its competitor Lowe's have emphasized these advantages in their latest earnings updates. Home Depot isn't merely confirming its growth outlook, it's also setting its sights on achieving an operating profit margin of over 14% this year. As if that weren't enticing enough, their ever-growing dividend program promises even more delectable returns for investors in the coming years. Lastly, we have Amazon, which is always a strong pick for your stock portfolio. Amazon's e-commerce business has ballooned to a staggering $116 billion in the first half of 2023, up from $113 billion just a year ago. But that's not even the most exciting part of the story. The real adrenaline rush lies in Amazon's cloud services segment, which has surged to $146 billion from $125 billion and now comprises a formidable 56% of Amazon's overall revenue. Sure, critics may point out that Amazon's profitability isn't quite on par with tech giants like Microsoft, but the tides are turning. Recent cash flow trends and the turbocharged growth in the services segment suggest that Amazon is finally gearing up to boost its margins into the coveted double-digit territory. With vast horizons for growth in colossal markets like e-commerce and web services, it's no stretch to envision much higher annual earnings in just a few short years. Amazon is both a good short-term stock and long-term stock to hold, which makes this stock extremely valuable. And there you have it. Those are the top 6 stocks to buy on the stock market right now. This list of triumvirate heavyweights are poised to make your investment journey a lucrative one. All of these companies are geared up for exhilarating stock price appreciation and in some cases strong dividend growth. With prudent investing, you might just find yourself on the fast track to dazzling returns. So, seize this moment and embark further on your financial adventure. Your investment odyssey has only just begun, and the thrill is just beginning. Also, remember to like this video and subscribe. With that being said, I will see you in the next video.